Okay, great, great. Thank you. Again, my name is Dave Aquino, and the topic of my webinar presentation today is a program that I call Everyday Profits. Like Kevin mentioned, I am the live trading room specialist for ValueCharts.com, and I run the stocks and options live trading room. Now, one aspect of trading that we conduct every day, according to different time periods, is intraday trading. We also do some swing trading and longer-term type trades. But the webinar I'm going to bring to you today should be of interest of everybody on this line, because you're here during market hours, and there are particular kinds of opportunities that I'm going to talk about today that you'll be able to see about see the opportunities available in the markets. Okay. So again, please go ahead and submit the questions as they come to mind via the GoToWebinar side menu. I'll try to address them at the time or during the presentation or at the latest at the end. Okay, really quick risk disclaimer. I'm not going to take all the opportunity to discuss this. The most important thing is that you know that trading carries risk. You have the ability to both profit and lose when you enter the markets. Now, we've done everything to represent this information correctly, but we want you to know that past performance of any results illustrated here are hypothetical and can have many limitations. No representation that money will or profits or losses will be similar to those shown. And again, past performance is not necessarily indicative of future results. This is CFTC Rule 4.41. Basically, the CFTC wants you to know that you can make and lose money trading futures. I'm not soliciting you to buy or soliciting you to buy or sell future stocks or options on the same. And again, most importantly, past performance is not necessarily indicative of future results. That nice introduction by Kevin, I appreciate it. Again, I've been in the stocks and options live trading room for over 25 months, running that on a daily basis. When I was at Vanguard, we utilized in the ultra high net worth service stocks and options to generate income streams and tax loss harvesting strategies for high net worth clients, high net worth portfolios, highly appreciated stock. So the one aspect that I like to focus on with options is their flexibility. I know a couple of speakers have spoken about options, but that's one aspect that we do utilize in the strategy. However, it can be used according a couple of different ways, with futures, with ETFs, individual stocks, and options on the same. Okay, so let's get down to what we're going to talk about today. Everyday profits. It's a very, very interesting idea. It's an idea that I stress in my trading room. It's an idea I stress of how the basis of this webinar today is how do we generate money every day in the markets? Is that possible? What are the benefits for intraday trading? What does it look like? How much can I make in a day? That's the bottom line, isn't it? How much can I make doing this a day? And then, if it is possible, what are the rules that you are well established for great intraday trades? How can you do it on a consistent basis? And I'm going to touch on all 3 points and show you some more proof that it works. Then we'll talk about what trade setups work intraday. How frequently do these opportunities come up? There's an aspect of everyday profits that I like to call the magic box. And when you trade the magic box and the parameters that the magic box sets up, there's a very high probability chance you're going to be profitable. It's very consistent. Of course, I can't promise you on any particular day that you'll make money, but in the long term, the way we structure our trades in everyday profits is extremely consistent and reliable. I'm going to also talk about an important point that we focus in one aspect of everyday trading, a morning reversal. Lots of times this happens by the clock. It's amazing. It's very, it's uncanny sometimes how just by watching the clock you can actually see opportunities to make money and proof that we've done it in the past. All right. Some other aspects of everyday profits is how do you gauge the strength of the various markets, and what does that mean to your trading? How do you detect the market's mood? Is it in a back and forth kind of seesaw day, or is it breaking out and running with a strong trend? Those are aspects of intraday trading that are important to know and are easily seen in the structure that we use for everyday profits. Okay, so before we really jump into the deep end here, I just want to ask a couple of personal questions. Okay, how much do you make? You know, your mama ever tell you it's not polite to ask people how much money they make, what their salary is? I'll be bold. How much do you make? Actually, how much do you make on a daily basis? Basically, what is your monthly income? What does your employer pay you? What is your retirement income? What is that number? Now take that monthly income. Someone goes, not enough. I completely understand. What is your monthly income? And take that number and divide it by 22, because that's about how many trading days there are in the month. All right, that number is your daily income. So we used to call it. My dad used to call it. I'm bringing home the bacon. You know, my dad's a doctor, and he'd come home every day from the office, and that's one thing he would say. Let's go through an example. You make $30,000 a year. That's $2,500 a month. You take that number, divide it by 22, and on a normal weekday, your daily income is about $114 a day. I just bought my children's shoes. $114 a day is not a big number, but that's something that a lot of Americans do. Okay, keep that in mind. What is your particular daily income? $114 a day, that's your bacon. Now, what would it be worth to you to increase that number, $114 a day or whatever number you came up with, by say $50 a day? How about an additional $100 a day? What would it be worth to you to boost that income and make a difference in your income stream on a monthly basis? All right, just keep that number in the back of your mind. I'm going to ask you for it again later. All right, let's jump into the deep end now. What are the benefits for intraday trading? Okay. The interesting thing about trading every single day, intraday, is that every day is different from the last. It kind of seems funny to say, but it is true. Every day is different, but one aspect is every day is similar. Okay. It's easy to adapt to a changing market environment because it's happening right in front of you. That's the interesting thing. It's easier to adapt than intraday than it is, say, on a daily basis. The one aspect of everyday profits that I like is that you know your daily profits. You walk away from the markets every day, your account is closed, you have no positions, and you have money in your pockets, and that's the goal. Now, there's a Yiddish proverb, with money in your pockets, you are wise, you are handsome, and you sing well too. And that is our goal. All right? So you have to keep in mind that this doesn't have to be just your entire portfolio. Most successful investors break their portfolios down in different levels. So you might have a long-term position, you might have a swing trading position, and then you may have an intraday position, and that's what I'm actually referring to now. Your goal is to generate that income and bring home the bacon every day. All right, and this is probably the most exciting part for me. All right, no tweet can get me overnight because I have no overnight exposure risk. Company analyst can't come out and say something against my position and then whack me so I wake up in the morning and I'm down, 2-3% in my position. So no overnight risk exposure. That's one aspect of it. Okay, how much can you make every day? All right, how much can you make every day is a very straightforward question. And again, every day is different, but each trading day is similar. This is probably the most important aspect of everyday profits. Every day has a rhythm. A trading day has a rhythm. It has a start it has a middle, and it has a finish. If you think about a normal 9 to 5 day job, you get up in the morning, you get ready for work, you drive to work, you get there, you have your coffee, you start your work, you have your meetings, you have lunch. You take a break, you step away, you come back from lunch, you work throughout the afternoon, you make your last minute calls, you wrap it up, you get in your car, you take the busy rush hour home, you get home, and then you see your family, have dinner, watch TV, go to sleep, start it over. Doesn't that sound like most people's lives? Every day is different. Just because the markets are some ethereal thing floating out there, people still have to run the markets. And every trading day, it follows a similar pattern. Okay? There is an active morning period in a trading day. Okay? All the overnight orders come in, there's the open, there's a movement for probably the first couple of hours, then we kind of iron out the trend, we have lunch. Okay? In that active morning period, usually there's either consistent range-bound kind of movement that we can trade, or there's a potential breakout, either higher or lower, depending on the current trend. Okay? But if you have the correct structure and know what to be looking for, you can trade this active morning period with a high level of consistency. Okay? Here's an example. This is the open. This box is my opening range, also known as the magic box, and you can see prices are moving up and down, okay, and then they pop out here, and after the opening range is established, there's some certain tendencies to move back into the range of the box, and then at certain times there's price movement, and it can continue in different directions. This is the active morning period. Roughly 9:30 till about 12 o'clock Eastern time every single day. Okay, in this particular move, this is what happened. This is what we traded. Okay, let's see here. You can see after the box closes, we make this single top. What I start to look for, and after the opening range is established, is a pullback into the middle of the box. Now, this particular chart is the NASDAQ QQQs. Now, this is one thing that's interesting about everyday profits. It does not care, as long as you pay attention to stock futures, it doesn't care if you trade the ETF, the futures, individual stocks, options, or the stocks themselves. It doesn't matter, because the majority of the time the markets move hand in hand. Most large cap stocks move with the market. Okay, and I'll go in more into detail with that. The NASDAQ QQQs, we see this pullback into the middle of the opening range, and we play this trade right here. Momentum is sliding down. Okay, this move starts about a little bit after 10 o'clock, and by about 10:12, 10:15, we're making these new lows down here. And in that move, here we played both Netflix puts, and roughly with 15 contracts in Netflix and roughly 10 contracts in Priceline, we pull out these profits, roughly 2,500, roughly 2,200. Now, that's not always guaranteed. It depends on how far those particular trades move. But it is you do have the ability to consistently take those trades. Now, you say, well, Dave, what if I can't afford that many options? It doesn't matter. This particular option was about $8. This one is about $3.50. You can't trade that many options. That's fine. Trade one or two. Okay? What matters is that you take consistent trades and pull out consistent opportunities when they appear within particular time periods and against particular price levels. So that's an example of taking that particular trade. Again, active morning period, either a consistent range-bound kind of movement or potential breakout moves. Now, between morning and afternoon, we have lunchtime. But after lunch, we have what I call the afternoon period. Now, today is kind of like that sort of day. The market has made a little bit of a move to the upside. It's in the middle of lunch, and it's consistently trading sideways. The afternoon can do one of two things. If the market has been up most of the morning, gone sideways, it can either break up, out, and go higher, or if it's above the opening range, the market could move back into the middle of the opening range. The opening range is kind of a magnet for pulling prices back toward it. And that's usually on a range-bound kind of day. If it manages to escape that opening range, there's a tendency to move and continue moving out away from the opening range. Okay? Again, that's what I mean, movement back into the middle of the opening range, that's the retracement. And then here we have continuation moves. So if we're bullish in the morning, you can go sideways at lunch and then continue to be bullish in the afternoon. Okay, here's the afternoon session. Here roughly is the opening range. Okay, and then we have a breakout most of the morning. We have we go sideways here, a little bit of a pullback at lunch, but we end up right back here. And throughout lunch, it's in this channel. And then what do we have in the afternoon? A breakout higher. Okay. As a matter of fact, this is actually what I'm expecting will happen this afternoon. You see this pullback? This is a Friday. Lots of times people don't like to be overexposed. See, we've got an extended run to the upside, and then we have this, what we call a late day snapback. So it goes back where to? Here's the top of the opening range right there. That's where it comes back to. See, the opening range serves as a magnet attracting prices back to it. Again, so this is Friday, pullback. This is what I'm actually expecting today. We'll see if we get it. Okay, but that is the opening range. Now, on this afternoon session, the one that I want to focus in on is this move right here. After lunch, we have a continuation move higher. Right there, that is, we traded that move in Tesla. And Joe, your question is good. Joe's asking, Dave, how do you make those trades like that? I trade them intraday, and I'll buy a Delta 70 in the money call when a particular move starts to happen. That's how I trade that. You can see, again, continuation pattern, and then we break out higher. And this is roughly, you can see that's about 2 p.m. Okay, 2 p.m. And about 10 contracts there allow me to make about $1,800. Tesla calls. Oh, that's one other thing, Joe, your other part of your question. I am looking at the NASDAQ QQQs, but what I like to do in my trading room is look at large, high-quality, active stocks like Tesla and Google and Apple and sometimes Priceline. And if I see a breakout move in those in the index, I'll look to those individual stocks. And because of the nature of those stocks, you actually can make more money with the individual stocks following the same movement of the index. Okay, but you could have just as well traded the QQQs. It would have been just the same. Okay. All right, and again, when I was talking about options, a Delta 70 in the money options, I'm utilizing the power of leverage. Okay, the power of leverage, and that helps you magnify your returns. How much leverage can you get, or how big an account size do you need? That I can't really give you advice on. I know 25,000 is the minimum to trade intraday for stocks and options. I know some people that have smaller futures accounts. They trade this strategy. They trade the E-minis, they trade the NQs and the YMs, and they have great opportunity with it. Okay, and you can use futures options, but in my mind, I'd much rather have the ease of getting in and out of your positions. There's enough inherent leverage with futures already. I'll actually show you an example of that. But let me just keep moving forward here. I want to make sure I am able to continue and get this information to you. All right, 1 second here. All right, so that is everyday profits from the structure of it. So what now that you've seen opportunities like, wow, this guy's trading intraday, these patterns are kind of consistent, he's making some money. If I wanted to do this, what kind of rules are there for that you should really kind of follow as an intraday trader? And let me give you some examples. Know that each trading day has two distinct halves. Okay, there's a morning session and there's an afternoon session. That's very important to know. You wouldn't believe how many traders come to me at lunch and say, Dave, I need to trade. I got a loss from this morning. I need to get in there and make some money. I'm like, okay, but you're going to have to wait. I'm like, wait for what? So you're going to have to wait for the afternoon session. Everybody's at lunch. Of course, not everybody, but the majority of the activity in the markets take place in these two sessions. Okay? You need to be aware of the lunchtime lull. You can get easily in and out of positions at lunch, but the thing is it moving enough to be something that you can trade? Is there opportunity for a setup to occur that actually makes a move of substantial amount that you can make money? Okay? That's the most important thing. I have a lot of traders that say, look, this stock is up. Great. It like Netflix is a bad example because it's actually moving well. But today, let's for example say Netflix pops up 20 points and it gaps up, it moves up $5 and it stays plus 25 the entire rest of the day. So you can trade Netflix all you want. It's not moving. Okay? It has to move and lunchtime is not the place for that. Okay? Follow the index signals for greater success. You're like, what? Okay, is the NASDAQ moving? Is the S&P 500 moving? Is the Dow moving? Follow those indexes for greater success. Those of you that are ever been on a sailboat, or a boat in general, if you're going out of the harbor or sailing away, you want to sail with the tide, right? You don't want to sail against the tide. That's counterproductive. It's exactly the same way when you trade. You want to trade with the index. The index is your wind. It is your tide. You trade with the index, it makes more sense. Dave, what happens if the index is not moving? Don't trade very much. If the index is very, very choppy like it was the majority of the second half of the morning today, don't trade, because you're just going to give your money away in commissions. You want to watch the performance of those indexes and watch the strength of the momentum. Okay? Match the index to your stocks. Now, the majority of the stocks that I trade with the NASDAQ 100. Okay? The ones I named earlier, Priceline, Google, Netflix, and Tesla. Okay? But don't forget the S&P 500. Okay, S&P 500 is the 500-pound gorilla. It represents 80% of the market. So if the S&P wants to go up hard, it doesn't matter how much the NASDAQ wants to fall. It's going to get carried with it. Okay, so pay attention to the indexes. Okay, all right. What trade setups work well with these markets? Okay. And let's just talk a little bit about it. There's like so much information I want to give you. It's amazing. What trade setups work and how frequently do they work? Range-bound trading, roughly 2/3 of the time. Okay. It's funny that sometimes when I'm trading everyday profits and using this structure, the markets move up and they move down and they move up and they move down within this range. And then by the time lunchtime rolls around, the markets look like they're unchanged. And I go to out for lunch, and on the radio, they update me on what the markets are doing, and they say, "Wow, markets aren't moving very much today. We're basically unchanged." And I kind of smile to myself because I know I made money, and I actually make money in the range-bound trading a little bit more easily than the breakout stuff. Okay. What I'm looking for when I trade range-bound trades, I'm looking for reversals within the range. Okay, I'm looking for single tops and bottoms, double tops and bottoms, specifically divergences. And then you also can look at triple tops and triple bottoms, also seen as head and shoulders or inverse head and shoulders positions. Okay, here, let me show you a quick example. Again, here's the trading. This is in the NASDAQ. So this establishes the opening range. Here's the high. Here's the low down here. All right, we break out of the opening range right about the middle. We come down. We test the bottom of the range right here. That's the first test. Second test goes a little bit past it. Bounces one more time, makes another bottom. Okay, you see how we test 1, 2, 3 times? That's an inverse head and shoulders position where? At the bottom of the opening range. And that opening range starts a process in which we move back towards the middle and a little bit past the middle of the opening range box, right there. Okay, this price action, actually we traded in an individual stock, and you can see that we traded it in price line. Okay, price line right here, I traded that move in 10 contracts, and I made nearly $5,000. Okay, about $500 a contract. Priceline can do it because Priceline is such an expensive stock. For Priceline to move $10 when this index is moving up and retracing is very straightforward. There's certain aspects of trading these things that you need to learn about before you can just out and out do it. But that 10 contracts, again, about $500 per contract. Okay, very straightforward trade. Okay, now other trade setups that work, breakout types of trades. This occurs roughly about 1/3 of the time. And recently, probably about 1/4 of the time. The markets have been very range bound. Okay, breakout trades. What we are looking is for strong momentum breakouts to the upside or to the downside. Do I use 1-minute charts all the time? Sometimes I use 1 minute, 2 minute, or 3 minute. It depends on at what point in the morning am I trading. Okay, these trades tend to be pretty compact because we're only trading the morning session, or we're only trading the afternoon session. Okay, but these are strong momentum breakouts on the breakout type trades. Again, if we're bullish, we're looking for a break higher through resistance at the high of the opening range. Okay, high of the opening range. On a bearish breakout, we're looking for a break through the floor. Okay, we're looking for the low of the opening range to be broken. Okay, low. Okay, that's what we're looking for. Here's an example. The SPY on 1 minute trading here, where you can see where's the direction, this high to this high to this high. You can see that momentum is falling, and when the opening range closes, it breaks, it makes a bear flag, and it breaks again. So this move to this support level, it's actually pretty cool. See the height of the opening range, this high to this high, and then this distance is actually almost the same as this distance. Everything tends to be very symmetrical in the markets, but it makes that, and it makes a nice little double bottom right here, and it starts to go higher. Okay, very, very neat. So that particular trade, that's an example of a breakout trade. Again, roughly 1/3 to 1/4 of the time. Okay, but keep in mind this market tends to be a little choppy, so about 1/4 right now. Okay, so next is, let's talk about this opening range, this magic box. Okay, I'm going to quick double check my time here to make sure I still have a good amount of time. Okay, we're good to go here. All right, so trade the magic box and you will be profitable. Yeah, okay, because consistently, well, let me ask you, if I could tell you what price levels to look at, when to trade, what to trade, where do you take your profits, and and when it's going to do it. If I told you all those things, is there anything left for me to tell you? What to trade, when to trade it, where to buy, where to sell, and when to do this stuff. Is there anything else left? Now, that's what the magic box provides you. It's a structure. It is the opening range of the market. Okay? Again, I'm going to show you an example of it because the magic box carries throughout the entire day, but it has its strongest effect, in my mind, in the morning. Okay? The high of the opening range, I've shown you in the past, that's resistance. The low of the opening range provides support. Okay? Here's an example of the opening range. We've seen a similar pattern earlier. It's moving up and down, pops out of the middle. It establishes the magic box, the opening range high and low. You can see them. Again, provides support and then a movement back towards the middle of the opening range. Okay? You know that, okay, this is a double bottom. Momentum shifts right here. It goes positive. The next low here on your first higher low, that's where you enter right above the opening range level, and then it starts to move up. Again, this is the NASDAQ. What do? I look on an individual stock for something that's maybe made a double bottom or something like that, and then we start to move higher. That is the trade. I'm telling you what to trade, the NASDAQ QQQs, when to trade it, right here on the low, where to trade it, right here on the opening range, when to trade it, okay? I will teach you also trade by the clock. This is the AM reversal time period, okay? Markets have been trending a little bit lower right here. We're looking for that mid-morning reversal, and we break higher. I said, what, where, when, how? Buy a Delta 70 option, carry it higher. Or trade the QQQs in the money options right there. And where is it? Where do you sell it? Look to take some profits here in the middle of the opening range, and that's where we stop. Okay? I'll talk more about the opening range setup in a little bit. That's all part of the Everyday Profits program. All right? So one aspect, respect the high and low price levels of the opening range. They're very important. Okay? Play range-bound trades when you're between the two levels. If you are above or below those two levels, look for trades outside, continuation moves, or if it's in the afternoon, maybe a move back into the opening range. Okay? Again, this is the same one I've shown you a couple of times already. All right? Hopefully, okay, there's a couple of questions. When I buy those Delta 70 options, I'll hold them for the time period in which I'm conducting the trade. If I'm seeing that the QQQs are going to fall, I can buy some Delta 70 or Delta 60 put options on the NASDAQ QQQs or the SPYs or the diamonds, the DIAs, and play a trade, a pullback trade. Okay? You can easily do that. Now, there is aspects of leverage and aspects of the bid-ask spread. I don't really want to get all into that, but those become factors. I like the leverage and I like the liquidity in which I can get in and out of options. That way you have to be kind of specific as to what ETF options you trade, and then also what index or what particular stocks you trade. All right, so everyday profits, a couple of more secrets, so to speak. All right, trade the mid-morning reversals, and you can make money just by watching the clock. Every day is different, but the majority of the time, there's something that goes on in the middle of the morning that will cause an AM reversal. Okay, you can see it when the markets have made a sustained move of anywhere from 15 to 20 minutes in one particular direction, and therefore you start to look for a reversal, especially when it is at the top or the bottom of the opening range. So if it's moving like this, it makes a little breakout, and then momentum shifts, you're looking for a move back into the middle of the opening range. Okay, that's the type of trade you're looking at, and vice versa in the opposite direction. The markets hardly ever move in a straight line. They always zigzag, and that's what you're trying to do on a range-bound day. In the afternoon, what you're looking for is either a pullback into the range or a continuation move. If the markets break out higher, okay, and this is the morning, this is the lunchtime, you're either looking for a pullback into the opening range or a breakout higher in the continuation of the move from earlier today. Sorry, I'm running out of space. I can't write. Okay? And then at the end of the day, be careful. If you still have a position at the end of the day, you could get a really good snapback towards the middle of the range, especially on a breakout sort of day. This tends to happen sometimes on Fridays. Okay? Yes, I look at the QQQs or the NQs, whichever you prefer, because they still will move hand in hand. Okay? This is the mid-morning reversal. Most of the morning, 20 minutes straight up. We make this high. We pull back. Where to? And lots of times I use Fibonacci retracements when I have my target. Here's the low. Here's the high. And this right here is about a 618% retracement, maybe even a little deeper. It pulls back. And this is where you buy puts right up here. You buy puts, and then you sell them down here. Okay? You check momentum. I mean, this is part of the way I trade. You don't have to trade exactly like me, but if you know that the market has a tendency to reverse at this time, at this level, and you're looking for a pullback, then you can take a trade in whatever vehicle you want to. All right? This is the afternoon snapback. This is actually, again, what I'm looking for this afternoon. Mainly, I would think that you don't want to be overexposed when you're not sure if Greece is going to default come Monday morning. But anyway, that's the afternoon snapback. Quick snapback, probably in the last 20 minutes. If we have an extended move higher, sometimes the market pulls quickly back and it closes the day. So lots of times that's driven by people that have made a lot of money during the day and they don't want to lose it going into the close. Okay? The one other thing you can do, yes, you can do credit spreads. You can do trading. We have people that trade credit spreads and debit spreads. It doesn't have to be a pure directional option like a put or a call. However you want to do it, that's the flexibility of options. As long as you know which way the market is going to move, there's different ways to make profits. All right, everyday profits, I suggest that you can gauge the strength of the various markets. Some days, one market is stronger than the other. Usually, though, they move hand in hand, so it's not a problem. 80% of the time, they move together. Okay? Sometimes one is stronger than the other, but if that index is leading, especially if it's the S&P 500, you're very good chance that the other markets will follow. Again, majority of the time you don't have to worry about this because if you look at an intraday chart, you'll see how the markets move together. It's really not a problem. Okay? It's also good to gauge the market's mood. Is it going back and forth? Lots of times before FOMC or a major economic event, this is the kind of day we have, a back and forth kind of market. What you want is consistency so you can make consistent money, right? Is it breakout? Is there something going on in the markets that's really jazzing it up? It's really moving. That's a breakout kind of day. That one you have to trade differently. You're looking for breakout levels from resistances or support. Okay, that's the kind of trade, and you're looking to get in, you're looking for continuation patterns like flags and pennants and continuing higher trends, higher trending momentum. Okay, all right, I know that's a lot. You can, like I said, you can trade indices, you can trade futures. I think if the only thing that I was trading and I wanted to make it as easy as possible, it would probably be futures. If I'm trying to make as much money as possible, I'm trading individual stocks options. Okay? If I want pretty straightforward trading with nice leverage, I'm trading the ETF options. Okay? All right, so come on back to my original question. You wrote this down. What would it be worth to you to boost that income every day? Okay? By $50 a day, $100 a day. Okay? $50 a day is equivalent to $10,000 a year. Okay? $100 a day is $20,000 a year. Okay? What would it be worth it to you to take advantage of that? All right? Now, Everyday Profits is a workshop that I ran about a month and a half ago, and we've been actively trading it in my trading room every day. Basically, for the past 2 years, I've been making money trading options intraday. This is my way of structuring and distilling everything I know about making money intraday. And we've been using it in the trading room, so I know this system is consistently well structured. People are making money. I can't promise you that you will every single day, but you will be able to see the market in a different light. It will put a framework around the day in which you are looking for trades. It's almost like if you are a fisherman and you're trying to catch this rare fish, if I tell you what lake to go to, what lure to use, where to position your boat, and what kind of bait to use, and what time to put the bait in the water. If you could tell all those things, all that's left is for you to catch the fish. Same thing with Everyday Profits. I give you the structure in which you can be active. Okay, it would be beneficial for you to be able to trade intraday, individual stocks, ETFs, and options. Okay, like I said, I have some traders that trade futures with this, and they're very successful. I think that the requirements are much less. We also have some swing traders that are looking, and they utilize Everyday Profits to help them time their spreads and entries on a swing basis. Absolutely. If I told you that, hey, look, this is going to reverse right here at the bottom, and then you're looking at your longer term charts and you say this thing's still going up, and in the morning it comes down to the bottom of the opening range, it makes a double bottom bullish divergence and is about to take off, well, you'll say, hey, this is where I buy my debit spread because I think it's going higher, or this is where I'm going to sell my credit spread because I think it's going to go higher. Everything works together. Okay, so this is Everyday Profits. Now, the website to get this special offer on this price is realtraderswebinar.com/ValueCharts. Okay, now when I put this webinar workshop out there, I did it on a Thursday, and come Friday, I had 2 or 3 people tell me that they made more than enough money trading this strategy that day that they covered the costs of the workshop. Now, I can't promise you that, and everything depends on how much money you invest, but it was very gratifying to have people have those results right away. Here's an example of some of the trading that I do in my room. Now, roughly, most of the time when I take a position, I take anywhere from 10, 15, 20 contracts in these individual stocks. Okay, so this is what I've done. This is kind of a screenshot of what I've done. But looking at these profits, okay, roughly 20 contracts, I made about $12,000 there. That's about $635 a day per contract. So if you can trade one contract, there you go. Okay, there's another day. This was about a month ago. All right. Again, about the same amount, 12,000, 20 contracts is about $625 a day. Okay. Now, the thing about this particular workshop It is knowledge. And another thing also, there's a PDF of all the slides, and there's a neat 12-page step-by-step guide at the end. It's time indexed, so whatever time it is during the day and the markets are open, you look at that time and you turn the page, and it tells you exactly what you need to do. So this is not an ongoing recommendation service or anything. I'm teaching you how to do this. I believe in teaching a man or a woman how to trade. So this provides an ongoing, consistent structure that you can learn how to utilize yourself, because everybody's a little different, okay, in that you can use them in different ways, but the opportunity is still there. No, you don't need any of that. This workshop is available now. It's on demand. All right, this is what's interesting, because remember I showed you these, and you're like, okay, Dave, that's great. What was that, 3 months ago? All right, how about this? Everyday profits. This is proof that this works. This is Wednesday, the 22nd of April, 2 days ago. Opening range move down. It continues. Once momentum shifts, we make this move to the upside. Now, usually I think, hey, it's going to go to the middle of the opening range. Wow, it just blasts through it. And where does it stop? It stops at the high of the opening range. Now, this move here, this is 13 points on the ES. From this low to this level right about here. Okay? That 13-point move is roughly $650 a contract. Okay? $650 a contract. What if you're not that good? You caught it a little bit late, got out a little bit early. Hey, take half of it. $350 a contract, pretty good. I mean, that's what we have. That's Wednesday. I'm not cherry picking. How about yesterday? Here, the opening range move. Doesn't this look like the one I showed you earlier? Here's the opening range box. It comes up. It actually, and you know what this line is? This is a previous opening range level. Sometimes I leave them on there. It hits that level and it pulls back. Okay? This move from this high to this low is that's a 100% retracement coming back. Well, almost a 76.4% retracement. That is a 7.5-point move. Okay, on the ES, that is $375. Okay. Now, what happens here? It starts to make a bottom. You can look at this. This is the mid-morning reversal, and then it goes up, and then it's a little tricky to trade yesterday because it just creeps higher the entire morning till about lunch, and then all of a sudden we get this explosive move right before the doldrums, right here, and then after the morning, what do? We just kind of stay sideways, and then. But my point is, this move right here, $375, and then once we get out here, we get this another breakout move. That's another 10 points. Okay, that's probably another additional 500. So you get a lot of opportunities, and the easiest one is this one, 375 on the ES. You could have just as easily traded Tesla moving higher. So I mean, it's pretty consistent the way these structures work out. Again, there's another day we traded. Lost some in Google, didn't quite work out, but Netflix calls, Priceline calls, probably an all bullish sort of day. Here's another set of calls, roughly 13,000, 20 per contract. That particular trade, $664 a day. Let's say you're not as consistent, or you're new to the strategy. If you're making $100-200 a day, that's fine, right? So again, if you're looking at everyday profits from a standpoint of kind of how can this fit into my trading? If you take one trade, and I have a couple of traders they come into my trading room, but they're so good at the strategy, they don't have to come into my room. I think they do it just to let me know how they do. They look for this mid-morning reversal, and that's all they trade. and usually they'll trade it under certain parameters, and they just come in, take that one trade, and then they'll say, hey Dave, I'll say, wow, great trade. Did anybody take it? And he's like, oh, okay, it's Jim. Jim, made X amount of money. He said, I'll see you tomorrow. Now, when he comes into the trading room, he probably gets the opportunity 3, maybe 4 times a week. He makes a little bit of money, so therefore it works out very well for them. Everyday profits is what you make of it. I'm telling you how to trade. It's the framework that tells you where to look, what price levels, what time of the morning, what time of the afternoon, which direction should I be looking for these things to be moving in, how should I trade it? Should I trade it from a bullish standpoint or a bearish standpoint? And then where is it going? Where are the likely places that I'm going to take some profits? And that's the target I should have. Because half the time you're worried about, okay, should I get into the trade? And then when you're in the trade, you're worried about what? Where do I take profits, or where do I put my stop loss? That's all explained in the strategy. Okay? What would it be worth to you for an additional, 10, 20, however many thousands a year? Of course, I can't promise you that, but wouldn't it be worth it just alone to put some order to your day so that you know and have an idea of how the market is structured and how the potential it is for you to make money? I'll tell you, in the past couple of weeks, there are some days we're not making as much money. Why? Because the market is very choppy. If you've been watching the market, you've seen that. And the nice thing about everyday profits that I've just recently found out is not only does its structure give you the parameters in which you can take successful trades, but also puts a structure in so you can easily see when the day is really tough from a trader's standpoint. Okay? If I could tell you the weather is good, go ahead and trade, or the weather is terrible, just sit and watch the markets today, because you're going to end up just getting chopped around, paying commissions to your broker, and not making much money. Okay? You could do that just alone would save you the headaches and the cost. Okay? You have to manage your emotional capital. On those tough trading days, it's really hard to make money. It makes it difficult because the opportunity is different on different days. Everyday Profits gives you that structure. So I hope you take advantage of the special webinar offer. It's $297. In the grand scheme of things, if you learn these setups, again, there's a PDF of all 144 slides in there, but also the last 12 pages. It's the step-by-step 1, 2, 3 guide through trading the entire trading day. That's worth $300 in and of itself. You just go, you look what time of day is. Oh, pre-market, you do this. Opening bell, you do this. Opening range, you do this. Mid-morning reversal, you do this. It's indexed by time. So it lays it all out there for you. All that's left is for you to take action, folks. It really is. Again, I've been running this trading room for 25 months. Okay, we do this every day. So I think I've been exposed to up markets, down markets, and sideways markets. So I've distilled everything into this workshop. I know the system works, and I know it makes trading easier. It keeps you out of trouble, and it highlights opportunities. So go to realtraderswebinar.com/ValueCharts, and I think you are going to be extremely happy with this on-demand webinar. It is right there for you. Get the workshop, learn it. I would suggest watching it twice, and then come Monday morning, you'll be in much better shape to take advantage of what the market throws at you. Okay? All right. What you get for the price, Steve, this is an on-demand workshop. It is 3+ hours long, plus a PDF copy of all the slides. Again, the most important thing is I wouldn't say, I mean, the whole thing's important, but the last 12 pages of those slides really are the most useful. But again, what you are getting, and I think is more valuable than, you know, me sending you an email with, hey, take this trade. I mean, I could do that, but you won't learn anything. Once I stop sending out those emails, you won't know what to do. With this Everyday Profits workshop, the structure of the daily market won't change. Okay? People thought that going 24 hours, I can trade Apple anywhere because you know, you got a pre-market, aftermarket, all that kind of stuff. Asia can, you know what? This is your opportunity to make money. And here's the thing. If you find something that works consistently, you don't have to keep chasing the next new thing. Think about it. If you could master the structure as I've laid it out, you have a very good chance of knowing what may or may not happen that day. If it happens, great, take advantage of it. If it doesn't, well, you're like a hunter. You're not going to go out in the woods and bag a deer every time you go out there. But you'll at least be in the right place at the right time with the right ammunition, ready to go. Nothing there? It's fine. Go home. You didn't lose anything. I'd much rather sit and watch the markets the entire morning, not lose any money, and go have a nice lunch. Okay? I like it easy. I like it easy, and so do my traders. You do this, you can bang your head against a wall dealing with the markets, but this way you have the tools, the structure, everything you need to be successful in the markets. I wish you the best. Please come and visit me anytime you want, but this is the special offer. We can't discount it anymore. It's so valuable. So take advantage of it. www.realtraderswebinar.com/ValueCharts.